Good afternoon. Anand, what is the sense that you're getting? So far it's been a smooth ride. Do you think we could face some hurdles at this 5200 level?
I would think so. I think the market has pretty much done whatever it had to do on the upside. I think there is perhaps a little bit too much. Let me just backtrack. A couple of weeks back, last when I came on your channel, I had said that we were near at a level where, if it was any further fall from there, it would merit buying on a valuation basis. I had also pointed out that I think the upside is capped. I don't think there is anything that causes me to change my views. Whatever is happening in Europe is not enough to be able to take care of the problems. It will only postpone them. And therefore, I think that the upside from here will remain seriously capped for some more time to come. And at this level, I would expect, therefore, to see that the market does have some resistance.
Anand, afternoon. For whatever you might have accumulated at those lows, which we visited thrice, would you even take profits around these 5200 levels if you got 10-15% on those names?
Absolutely, I think so. I think buy and hold is not necessarily something that will work over the near term. You will either have to have a very long time frame, that is 3 to 5 years, and then expect to make some serious money. But otherwise, on a near term basis, I think you will continue to find that the market will remain capped on the upside at least for the next 3 to 6 months. So if you do get a chance to accumulate lower, I would sell it at these levels.
There's a lot of intense focus, Anand, on what could come out after the next two European meetings slated at the end of this month. What do you think comes out from there, and will it be enough to justify the rally that global equity prices have seen?
So as various people have pointed out, there isn't that much money to solve both the debt crisis as well as the sovereign debt crisis. The issue therefore is how are you going to, you may set up a fund which may get approval from all the various countries and therefore can become operational. And as I said, that can kick the can down the road a while because it can deter the market because there is now ammunition to fire against the market. But the problem fundamentally remains that you need to get the revenues up and you need to get the growth going again. Otherwise, the debt trap continues to be fairly potent even now. I have of late read only one particular viewpoint which seemed to suggest a way out, which was that you package all the public sector investments of a country like Greece, for example, which should then come to about $150 billion euros, put it into the ECB so that there is no pressure onto the market. That would bring down the debt to GDP of that country to about 0.8. That will reduce the CDS spreads to much lower levels, which will allow Greece to go back to borrowing and therefore get out of the debt trap. Now, to my mind, that does seem to, it's something similar to what we did when we had the UTI issue on a much smaller scale in India. But I think that could be one possibility where you could unravel some of the issues. Aside from that, I think the overall picture, just because you've put together some money, in my view, is not going to solve anything. You can look at the example of the US, where we are again talking about now potentially a QE3, which now my belief is, and I think now it's more or less shared by many others, that is going to make won't make an iota of difference to the market at all. So net, what we are looking at is that we still need a debt restructuring model, and either a haircut has to be taken for most borrowers or most lenders, which they are not obviously very happy to do, or we'll have to have some serious levels of social and political unrest in many countries. I think Slovakia is only one example where the government had to fall because of this the vote that just happened. So I don't really see a solution yet. I think there are still too many issues out there, which is why I continue to remain fairly circumspect on the upside on the market from here.
Anand, coming on one space, the IT sector, because the earnings so far, be it Infosys in our market or be it Google, Accenture globally, have not thrown up any kind of chinks with respect to global demand. Is that a space that you would prefer now, and which stocks, if at all?
Well, unfortunately we don't have a Google or a Facebook in India, so therefore we are restrained to talking about only IT services companies. And IT services companies doing well essentially means that the dollar that the rupee is not doing very well, and that also means that given the kind of so we have two different factors. One, the fact that you have an issue in the US in terms of slowdown. It will come through sooner or later. And secondly, the fact that you had a bonanza coming through because of the currency impact in the near term could have eased some of the pressure near term, but that's not necessarily good for most of the other commodities, oil or any other number that you would be looking at from the Indian perspective. So is also, in terms of the pricing, is there too much left on the table? I think, whatever is, the market will tend to discount it in a day or so. So overall, I think at best I would call it a market performer. Not something that you can expect to make too much money off, but it's a reasonably safe place to be, because when everything else is collapsing, at least these are companies where the cash flow is secure and there is no debt to be worried about for the most part.